Well, hello. It is Friday and you're watching Money Matters. I'm your host, Kimberly Lim.
And I'm Joel Flynn. Coming up in today's show, a win in the car safety ratings. Toyota tops the list of safest cars, but American autos lag.
The rand tumbles and markets are shocked at the abrupt sacking of South Africa's finance minister. Is a downgrade to junk far behind?
And safe for work. Facebook rolls out its latest offering. Just don't expect Candy Crush.
Well, all that to come, of course, but let's get to some of the top business stories making headlines today. KFC and Pizza Hut owner Yum! Brands says it's returning $6.2 billion to shareholders before separating its China division and listing it on the New York Stock Exchange. The capital return will be in various forms, such as repurchasing shares, a tender offer, or special dividends. Yum! Brands sales in China took a dive last month after the company was hit by food scandals and marketing missteps.
US automaker Ford is getting greener. It's investing $4.5 billion in expanding its fleet of plug-in and hybrid electric vehicles. The initiative is part of a new strategy by CEO Mark Fields. He wants to compete with companies offering alternatives to car ownership and vehicles which emit less carbon dioxide.
And talks to resolve a power struggle between the French government and auto manufacturer Renault are making progress. A dispute between the two began back in April when the government raised its stake in the company, giving it more power to veto decisions affecting domestic interests. The French government's move has also angered Nissan.
Well, staying in the automotive sector, and there's good news for Japanese car makers, although it won't be so welcome in the US. The latest crash tests show Toyota and Honda came out top for survivability, while American models fared poorly. And despite the Volkswagen emissions scandal, German car makers also scored well. Along with the Japanese, they've invested heavily in technology to prevent frontal collision.
Well, to tell us more about this, we're joined by TRT World reporter Ms. Kira Lee. Kira, thanks for joining us. Good news for Toyota and indeed Japan. Not so good, though, for the US. Why is that?
Well, they seem to be lagging behind in a few areas, and the US, this test is funded by the insurance companies, and it's really important because not only do consumers take note of it, but also the manufacturers. So this will really up the ante of the competition as we head into 2016. But they've made these tests harder. Before, they used to just sort of do one of those crash tests and assess how well the car fared, but now they've actually moved into how well a car can avoid a crash. So it seems that the German car makers, the Japanese car makers, they're really moving towards this automatic braking system technology and moving towards driverless car technology, which perhaps the US car makers aren't.
There does seem to be a discrepancy between how these different manufacturers are measuring their safety, though, doesn't it? So what exactly is the US manufacturers proposing to upgrade automotive safety?
Well, that's what they're going to focus on now, is this automatic braking system. They really need to catch up and make sure that they're keeping up with the European brands and the Japanese brands. The Japanese brands, such as Toyota, have always been quite far ahead in terms of this type of technology. And, this will be a shock for the US car makers that only, two of their brands made it into this list. And that, even the likes of VW are right up there, and this will be good news for VW because obviously it's trying to recover from that emissions scandal, and I think it's the Audi A3 is one of its models that's made it into this list, and that will be really good news for VW.
All right, Kira. Many thanks. China's government has allowed its currency, the yuan, to depreciate to its lowest level in 4.5 years. It's the biggest weekly slide since China's shock devaluation in August and raises questions about how far the authorities will allow the currency to drop. The yuan's weakness allows China to export more as it makes its goods cheaper on the international markets. It comes just days after the Chinese currency made its global debut as a reserve of the International Monetary Fund.
Well, joining us now to talk China and a whole lot more is Nick Beecroft, founder of HP Economics. Nick, let's start with the depreciation of the yuan. What do you think China's policy is with regards to its currency right now?
I think it's another monetary tool in the armoury, and what we have seen in the past month, when we've seen another slow 1.5% depreciation, it's a skirmish in the currency wars as well. It is definitely the case that the major economies of the world most of them would like to see their currencies weaker. This is China exercising its right to try and make that happen. Although it's not an all-out, if you like, blast from China, we have seen in the last week also, on the other side of things, attempts to limit the availability of liquidity offshore, making it more difficult for offshore players to sell the Chinese renminbi.
I mean, as far as currency wars are concerned, obviously not everybody can have a weak currency because they're all valued against each other, right? So how exactly does this play itself out in any meaningful way? Because the dollar is obviously doing quite well at the moment, but the US doesn't seem too worried about that.
No, and I think that's key. I think the Fed, on the grand scale of things, on a scale of 0 to 10, rests about number 2 in terms of concern on the dollar. The US economy has proved rather resilient in the face of this strong dollar. So I don't think it's going to stop the Fed tightening, nor probably ameliorate tightening unless it really gets out of hand.
Now, if we look yesterday, the IMF cut its global growth forecast, citing the falling commodities. Now, that situation doesn't look like it's going to change anytime soon.
No.
So, what should we take? What should we take from that in terms of the outlook for next year?
I think we should be really rather concerned. The real driving force between this reduction in growth is in the emerging markets, and particularly countries which are looking very vulnerable, like Brazil, South Africa, about which we've just been speaking, and Malaysia, Turkey, really in the eye of a perfect storm of commodity depreciation on the one hand. Their currencies are depreciating, ironically, much more than they would wish in many cases, and quite a lot of external US dollar-denominated debt. So this is really not a good space for those countries to be in. And I think the prospect of Fed tightening in this environment is really pretty scary. And I think the Fed will tighten. I don't think it's going to stop them, because I don't think they will give that much, if you like, credence or attribution to the overseas problems compared to the strength of the US economy. But one is a little bit worried about the world economy, whether it can stand this, quite frankly.
So in your opinion, perhaps, I think we've pretty much all agreed that it's going to happen this month. But are you saying maybe it's too soon?
I think there's a real chance that it is. Events are moving quite quickly. Commodities are not recovering. After the disastrous OPEC meeting, oil's plummeting even further. There's a great chance this winter that global storage capacity is exceeded in the oil market. One could put it as something like a 20% chance that developed market winters, Northern Hemisphere, are mild enough to reduce demand such that storage capacity is exceeded. And then oil could really plummet into the 20s. So it's a dangerous environment and rather brave of the Fed. You could say dogmatic and, if you like, sticking to rigid economic principles to do it.
I mean, as far as emerging markets and their exposure to that Fed rate decision is concerned, you know, they on the one hand want their exports to be cheaper, they want to be competitive, but that's all on the monetary policy side. When you leverage yourself so much against the dollar, you are exposing your economy as much as your currency, aren't you?
Yes, whereas the capital account versus the current account, and there's great. I think the growing concern will be dollar-denominated debt. This is what got emerging markets into huge trouble in the Asian crisis in the late 90s. Many economies are in a much better shape than they were then, less reliance on fixed exchange rates that were a real target for the markets. In aggregate, less dollar-denominated debt, but there are real pockets of concern. There are countries like Russia, which can be reasonably rather more resilient. The oil price may have gone down, but the ruble weakens, so ruble revenues hang together. But it's quite a disturbing landscape.
OK, Nick, we'll have to leave it there, but a pleasure as always.
You're welcome.
Well, to South Africa now, where President Jacob Zuma has stunned the markets by sacking his respected finance minister. That sent the currency, the rand, into a dive, falling more than 5% to record lows against the dollar, euro and indeed sterling.
Zuma gave no reason for his decision, but Nhlanhla dismissal comes just a few days after he clashed with the chair of South African Airways, who also heads the Jacob Zuma Foundation, over airline financing. Sonia Legg has the story.
A welcome promise from David van Rooyen, South Africa's new and unexpected finance minister.
I will endeavour to ensure that every policy is directed at creating favourable investment conditions, leading to the development of South Africa for all South Africans, not for the few.
He's got a tough job. The The sudden axing of his predecessor caused the rand to fall 5% against the dollar to record lows.
Nhlanhla Nene knew kind of what he wanted to do and was trying to protect us from crisis. And I think Zuma's action has just sent us into crisis.
There's a reason why Mr. Zuma is president, and I believe he has the right reasoning behind his firing of the ex-minister.
It's been a difficult 2 years for Nene. South Africa's once booming economy has been struggling, partly thanks to falling commodity prices. The further fall in the rand will only make matters worse, says economic analyst Azar Jamain.
Inflationary pressures are going to be lots stronger than previously anticipated. The Reserve Bank is going to have to increase interest rates much more significantly than we thought. And that means economic growth stands to be even weaker than we previously anticipated.
The president didn't say why he had dismissed Nene, but it follows comments Nene made about one of Jacob Zuma's close allies, the chairwoman of state-owned South African Airways. He suggested Dudu Myene had mismanaged a big deal with Airbus. Either way, credit ratings agencies are now circling a further downgrade to junk, now perhaps on the cards.
Well, joining us now from Namora is Peter Attard Montalto, a widely followed commentator on South Africa. Peter, what is your view? Was Nene sacked because he was incompetent, or do you think there was another reason?
And Nene was highly respected by the markets, and we'd taken a long time over the last couple of years to get to know him when he was deputy and then as minister. He had the trust of investors for his fiscal conservatism and for standing up to rent extraction and corruption, and that was ultimately his downfall. Let's remember he was praised by rating agencies last week, despite the downgrades, for core fiscal being broadly fine in the rating agencies' eyes. It was wider government policy, wider issues of rent extraction that were criticised by the rating agencies at that time. And it's ultimately the issue of the president's relationship with the chairwoman of SAA and Nene's attempts to stand in the way, which were ultimately his downfall.
So how likely is it, do you think, that South Africa now will be reduced to non-investment grade or indeed junk by the ratings agencies?
Well, we had that view anyway, but it was always a medium-run view that we would sort of hit sub-investment grade maybe through the end of 2017 into 2018 as growth continued to surprise to the downside, fiscal became more challenging, as we had some of these potential shocks coming on balance sheet from state-owned companies and guarantees like SAA. But that's really accelerated much faster. This move has really shattered confidence in the sort of previous axiom that National Treasury and indeed the SARB are sacrosanct, that you put the best minds in those places, that you treat them as independent institutions, that they're respected. This has clearly blown that out of the water, and hence the huge market reaction that we've seen. And that will only accelerate the move into sub-investment grade. And we think we may well have 2 junk ratings now by the end of next year, which will then force a lot of foreign bondholders actually to sell South Africa.
OK, so there's obviously going to be a lot of scrutiny of South Africa and its economic deterioration by markets. What do you think Van Rooyen has to do to persuade them that the country is in safe hands?
Well, he missed an opportunity yesterday. He didn't mention fiscal policy or markets at all in his first statement or in the Q&A that he had after his swearing in. That is a big surprise. National Treasury would have advised him to do that. And I think the trouble now is that he's going into lockdown before Christmas. We may not even see that much of him before the budget in February as he tries to find the ropes of this institution. Remember, the entire country goes on holiday for December, and it's going to be a difficult time, I think, to find anything, if you like, find any hope or sort of anchor. But I'm less worried about fiscal policy in the very short run. National Treasury is a massive tanker ship of conservative fiscal policy that will be quite slow to shift. The big risk is what's going to happen on South African Airways. You said earlier that a deal was mismanaged around South African Airways, actually with Airbus. Actually, it was very well managed. The issue was that the attempt by the chairwoman to put in place an intermediary company which would be used to channel service payments in rent extraction, for want of a better word. That was the objection that Nene and National Treasury had, and that's what we'll be looking to see if that deal now actually happens, and if those rather odd structurings happen.
All right, Peter, many thanks. We'll leave it there.
Still to come, Facebook at work. Now that's just what we need. The changing face of the world's most popular social media network.
Right, as the Paris climate talks enter their final day, there's some optimism that a deal can be reached by the deadline of Friday evening. The importance of a deal on global warming and emissions has been highlighted this week by the first red alert issued by China over levels of smog in the capital, Beijing.
It's prompting the authorities to pump more money into finding ways of battling pollution, including a boost in subsidies for electric cars. TRT World reporter Hayley Platt has more.
It's a familiar sight over Beijing, and on Tuesday came China's first pollution red alert. The government responded by restricting the number of cars on the road. That was good news for the electric car industry. Some dealers say interest has increased by almost a tenth. Li Yun runs BYD dealership.
As soon as the red alert was announced, limits were placed on cars with even number plates one day, odd the next. Some construction projects had to halt operations and public bus services were stopped. But there were no restrictions on electric cars.
Electric cars are also heavily subsidised, and that's led to a near five-fold increase in sales. 114,000 were sold nationwide in the first 10 months of this year, and China is on track to overtake the US as the largest market for electric cars. Wang Zheng is a businessman in Beijing.
I'm considering buying one because right now Beijing is formulating a new policy for smoggy days, and there are no limitations on electric cars.
Automakers can't be certain the increase in inquiries will translate into sales, and even if they do, it may not solve the problem. China relies on coal for around 75% of its power, and the electricity used to recharge the batteries of electric cars is also coal generated.
Now, we all know, don't we, Joel, who spends time on Facebook in the office, much to the annoyance of hard-working colleagues. But now the website is about to unleash a proper Facebook at Work service aimed squarely at those who work in offices.
As TRT World reporter Fred Katayama explains, it's been under test since January, and when it does arrive, it might not be free.
No Candy Crush for those who use a new professional service from Facebook. The social networking company is entering the $6 billion a year online career market with Facebook at Work. This service is expected to launch in a few months. It'll allow users to create work accounts separate from their personal accounts and use Facebook tools to interact with coworkers. Facebook representatives say it's nearly identical to its current social network with a scrolling news feed, likes, and a chat service, but you can't play Candy Crush on it. Facebook has been beta testing the new service since January with more than 300 companies like Heineken and Royal Bank of Scotland. It'll open Facebook at Work to all companies when it launches. It'll charge a few dollars per month for premium services such as analytics and customer support. The new service will pit Facebook against the likes of LinkedIn and Monster.
Now, just over a year ago, Philips announced that after 124 years of history, it would be splitting itself in two. Its hugely successful lighting division will be separated from the healthcare division, and many analysts seem optimistic about it.
Well, CEO Frans van Houten marks his 5th year in charge in April. His tenure has overseen radical changes in the company, which no longer makes many of the consumer electronics and televisions it was once known for. Now, as he looks ahead to the company's future, Van Houten is more determined than ever to see Philips to the next level.
In an exclusive interview with the CEO earlier this week, I sat down with him and asked exactly what his vision of the future looked like. Frans, many thanks for joining us and talking to us here on TRT World. Just to begin with, what sort of world, to talk about innovation more generally, what sort of world do you really see us living in 10 years from now? Because that's presumably the timescale that you're having to look towards, isn't it?
Well, you're right. Philips is an innovation company, and as an innovation company, we need to solve unmet needs, unresolved challenges. That's how we can create value. So we have a habit of looking at the world's grand challenges. And then, of course, what hits you is a growing, aging population with much more chronic disease. We also see a society that's coping with an environmental problem, an energy problem. And we have decided to focus both on health and sustainability as two core themes for our two main parts of the company.
What are the challenges more broadly, do you think, across the three divisions in sustainability, health and digitization? Is there one in particular that you see as being key to all three things, or are there big distinct challenges that you think are identifiable between them?
I've already mentioned that there will be more people that need access to health and health care. And that's a growing financial burden on society. You can look at the United States, where close to 20% of GDP goes to health. That can't grow anymore, and that's why accountable care comes in. At the same time, there are many parts in the world where people don't even have access to care. Right? And then there are not enough skilled nurses and doctors. So the ability to move health into the cloud and to leverage the Internet of Things, these are all great opportunities to mitigate, let's say, this issue of access and affordability in a world that changes fast.
Philips has a very close association with these sort of large machines that we see in hospitals, particularly those that we see in the United States. What are the challenges associated with making sure that these things are still affordable and accessible by consumers, by individuals and citizens in the developed markets as well, in the developing markets, sorry, as well as the developed ones?
Well, with the big machines, I think you're referring to diagnostics. And in diagnostics, we have multiple tools. MR, CT are just a few modalities. We also deliver ultrasound, and the latest innovation is our Lumify portable ultrasound, which is just a probe that you can connect to your smartphone. And in this way, we solve delivering the opportunity to scan pregnant women in rural Africa to see how their babies are doing. And it helps reduce infant mortality, which is still rampant at 6%. But by enabling nurses to do a local scan of mom while she's pregnant and supporting that with cloud-based analytics, we can actually solve that.
Okay, let's move on to climate change now. Obviously, the Paris Climate Conference is still going on. It's drawing to an end. Hopefully, we will see something in the form of concrete obligations on the part of countries. How does Philips see its role in terms of, as a larger consumer of resources going forward? We know about its commitment to carbon neutrality by 2020, but is there more that Philips could be doing? And what do you think what is it that we haven't heard of that Philips is planning on doing currently?
Well, I've already said that the world's challenges are also an opportunity. And in our innovation strategy, we try to link ourselves to what the world needs. Health, sustainability being two important themes. And we innovate, for example, by offering the most energy efficient LED lighting, smart lighting systems that can also interact with daylight and therefore further optimize the energy consumption. But of course, you also need to walk the talk yourself, right? And at the climate conference in Paris, we have announced that by 2020, we will be carbon neutral. Because I think you can only be credible as an innovator by also applying strict criteria to your own impact on society.
So what are its plans concretely then to develop energy consumption, and how does it propose to address responsible material usage and disposal, as well as managing costs associated? And also, how did you come to the point of identifying 2020?
We come with circular economy business models, where we say, what are customers, consumers really asking from us? If you want light, why do we sell you a lamp? Maybe we should just sell you the light as a service. And if we sell you the light as a service, we can actually optimize the technology, maybe with a longer life, or maybe we can take the technology back, thereby recuperating the materials and repurpose it for a next generation. So there is a lot possible once you commit to the concept of sustainability.
So you see resource sharing then going forward between consumers as something that's viable and entirely plausible?
Well, whether it's resource sharing or a complete different definition of ownership of resources, why would you buy the materials if you're only interested in the benefit of the product? Right? And if we are the expert of the product, maybe if we continue to be the owner and give you the benefit, we would design the product to last a lot longer, or design it in such a way that we can recuperate the raw materials in it.
Okay, Frans van Houten, CEO of Philips, many thanks.
You're welcome.
Well, that's almost it. But before we go, let's reflect on some of today's top stories. KFC and Pizza Hut owner Yum Brands says it's returning $6.2 billion to shareholders before separating its China division and listing it on the New York Stock Exchange.
President Jacob Zuma has stunned South Africa and the markets by sacking his respected finance minister. That sent the currency, the rand, into a dive, falling more than 5% to record lows against the dollar, euro and sterling. Nhlanhla Nene's dismissal comes just days after he clashed with the chair of South African Airways, who also heads the Jacob Zuma Foundation.
Well, that is it for now. We will, of course, be back later in the day with the top business stories making headlines all the way around the world. I'm Kimberly Lim.
And I'm Joel Flynn in London, and you are watching TRT World's Money Matters.